For an in-depth look at the state of China's economy, let's bring in Yan Liang, live from Portland, Oregon. She's Associate Professor of Economics at Willamette University. And Yan, I'm not sure if to start with the positive or the negative, but let's break this down all a little bit more, I guess, with the negative first. Retail sales failed to meet expectations. Why, and how important do you think that is?
Nice talking to you, Roee. So I think the decline in the retail sales growth is a little bit concerning because China needs to boost its domestic demand to offset the decline in export and investment demand. But I think this decline in retail sales has a lot to do with domestic factors. If you look at auto sales, for example, as in the introduction section, it talked about the automobile sales has declined for 15 months consecutively, and that has a lot to do with domestic factors such as the expiration of subsidies to small cars purchases, the crackdown on online financing, including the auto lending, as well as the slowdown in home and garage sales earlier. And most importantly, the household debt to GDP ratio has climbed up to 49.3% in 2019, which is pretty significant if you look at the emerging markets average of 40%. So I think there is a host of factors that slow down retail businesses. And I think that government needs to take some more aggressive measures, such as subsidizing certain purchases, reducing personal income tax, and also support healthy income growth, especially in the rural area, in order to support consumption growth.
Industrial production increased just 4%. That's the lowest in nearly 2 decades. What do you think are the ramifications for that?
I think this may have something to do with, the ongoing trade tensions. China's overall exports have fallen by 1% this month compared to 3.3% growth back in July. So there's some reduction in industrial output, partly due to the trade tension directly and partly due to the heightened business uncertainty and the lack of business confidence to expand and invest. But I think despite all the outcries of companies moving away from China, what we see is some cost-saving and export-oriented firms are moving away. But we do see a lot of other firms are coming in to take advantage of China's large and growing domestic market. We see the inward FDI in China expanded by 3% this year, which is pretty much on par with the previous 5 years average. So what I think we need to read into this number in a more balanced way. So on the one hand, it does show that the trade tension and the global economic climate has dampened the growth of industrial output. But on the other hand, I think this is part of the structural transformation of China, where China wants to move away from industry-based, investment-driven growth to more consumer demand-driven and service-based economy. I think this is part of a normal process, a short-term pain for the long-term gain.
Yan, there is a bright side here. Hopefully, there's always a bright side. Property investment grew at its fastest rate in 4 years. Why do you think we're seeing this divergence in those numbers from the other figures?
Well, I think the reason is pretty straightforward. When businesses are uncertain about industrial output growth, they reduce the investment in the real sort of industrial sector, then typically investments will find different outlets, and real estate market is usually the one that they are looking for because it's more domestic oriented, it's shunned from global economic turbulences. So I think that's one of the reasons why we see the property development growth. I think it's a small and helpful stimulus to the broader economy in the short run because it does help to promote the growth of construction and transportation and other sectors. And it also provides a wealth effect because when households feel that their property are gaining value, they would want to spend more. That said, we wanted to avoid an overheated property market. And also, if the property price goes up too much, which has been on average about 10% of growth, despite the policy tightening in the past 3 years, then with this very high property price, we could see the reverse wealth effect. So families trying to save for down payment and mortgage spending consume too much of their income, and they have to reduce discretionary spending. So I think we need to keep an eye on this market and try to regulate it so that it does not go overheated.
Indeed, lots to watch. Yan Liang there from Willamette University. Thank you for joining us.